Alright, what's up guys? Happy Friday, happy post-Thanksgiving. So, November 26th, market just closed up about an hour and a half ago. So, before I start to wander around the hood here, let's do our quick weekly recap. And I'm actually going to give you nothing but weekly charts here tonight. So, weekly charts only here on this Friday evening. So obviously, pretty interesting day today. Not a dull day for a half day, that's for sure. So some good selling pressure here today. S&P 500 is down 2.5%. The QQQ is down 2%. Check out the small caps in the Dow. The Dow is down 3%, and the small caps were down almost 5%. So definitely some good selling pressure here. No doubt about that. RSP, Equal Weighted Index, is down 2.5%. So no doubt about it, some good selling pressure here. And obviously a lot of this has to do with the headlines of the new COVID variant, whatever the case may be. So as it relates to trading, just kind of could quite frankly care less about any of that. Meaning I'm going to focus on price action and structure, as I tend to do, just ignore whatever the hell's going on in the news. So not that it can't turn into an issue, but here's the thing. If the variant or if anything else turns into an issue, the market will let you know. That's for sure. So I think anytime you get selling pressure in the market, first thing you do is ask yourself, has anything changed as far as structure goes? And so long as nothing is changing, you try to with patience, use the selling pressure as an opportunity to build or add some good-looking swing positions. So the reason I'm going to give you nothing but weekly charts here tonight is they do a pretty good job of tuning out just some of the ugliness of the Monday through Friday. So we'll start here with the S&P 500. You closed just barely below your weekly AEMA here this week. So there certainly could be a bit more selling pressure to come. From my point of view, even if you come down to the 21 EMA, so long as you find support here, this is a pretty normal flush in the context of a strong trend. And we haven't been at the weekly 21 since September, October. So in terms of the ebbs and flows of the market, that would actually be pretty common. You squeeze at your weekly 21, squeeze fires and takes you into about 2 to 3 ATR. To come back to the weekly 21, not all that crazy there. So I think you might have a bit more downside here, but in terms of structure of this really strong weekly trend, it holds up very well here at the 8. Still is in good shape down there at the 21 EMA. Where things start to get a little bit suspect is if you start to break your weekly 21. That opens the door for a bit more downside. But structurally here, everything's still pretty much intact. I think you got a bit more selling pressure to come for the S&P. But the weekly trend is very much intact. So, today's move did not do anything in terms of structure there. Moving on to the QQQ, which is going to continue to be my major focus here, for I think good reason. Very much intact. So you look at the month of November here for the Qs, it's basically sideways. It was a month of consolidation. But you closed today above your weekly AEMA, which even in the midst of the selling pressure and even though you're down 2%, to me is still a sign of strength. You still have stacked EMAs, green 10x bars. Even if there's more selling pressure to come, I like the Qs down here at the weekly 21. But the weekly structure does hold here. In Sunday's video, we'll take a look at the daily chart. There is a brand new daily squeeze, which I kind of like. But in terms of weekly structure, in the midst of some volatility, everything holds up here for the Qs. If there's more to come, I like it all the way down to the 21 here. So, with that being said, the moral here of the story for tonight is, as a swing trader, I think you want to welcome some selling pressure every now and then with open arms. Otherwise, it's just really tough for us to work good entries. If this shit just continues to rally, into the end of time, where do we work a good entry? So, you look at a Google here. I gotta love Google in this beautiful weekly uptrend, coming in closer to the weekly 21 with a brand new weekly squeeze. So it's not the kind of thing that's going to pay me in a big fashion next week, maybe not the following week, But you come in a little bit more here. You have a beautiful weekly trend. You're right in your weekly buy zone. You have stacked EMAs, green 10x bars. And then if you could get a weekly squeeze, well, keep in mind here, then you have the triple squeeze lining up for Google. With a weekly, I know I said weekly charts only, but here's your beautiful 3-day squeeze back at the 21. So to me, this is kind of the prime example of, hey, here's a great uptrend. Here's something that 2 or 3 weeks ago I was kind of begging for a good dip in, and I'm getting the good dip. So as long as the structure doesn't get tossed out the window, I'd look to take advantage of this with patience. But I think Google should be on your watch list with a triple squeeze here. Once volatility dies down, and if the trend continues for the overall market, this should be a squeeze that treats you pretty well. So keep an eye on Google for a potential swing here into January, February, maybe even March. We'll see. But kind of a prime example of a strong uptrend. And with the selling pressure that hits here today, all this really does, potentially, is offer you an entry over the next few days back at the buy zone. In other words, you're no longer chasing Google. You're getting it at the buy zone. I know I said no weekly charts, but here I go, breaking that rule. You're down to your daily 50. So all in all here, structurally, nothing changes about Google. So I think you got to welcome that selling pressure. Next up is Apple. We got our swing positions here. So still long Apple, still long Amazon, Netflix, and Tesla. Beautiful weekly squeeze. Now this is still a little bit extended, but in the event that Apple comes in a little bit more, you like it at the weekly 8, I think you'd like it back here at your weekly 21 EMA. So Apple looks phenomenal here, and I think in the event you get a little bit more pressure to the downside into the daily 21, just offers a good entry to get positioned for these squeezes here. Your 3-day squeeze and ultimately the weekly squeeze. Now, if the selling pressure just blows this thing down here to 140, that's a little bit different now. But as long as you hold structure, I think it's a good buy the dip opportunity. So Apple looks awesome, and then Amazon, I think, is a total monster here as far as a weekly squeeze goes. So you have a monthly squeeze on top of that. Then you have a 3-day, and then you have a daily. So a bit more selling pressure here into your weekly 21, I think is a good entry. And checking out the daily chart, you hold structure really well this week with a dip to the 21 EMA. So nothing changed here as far as Amazon goes in terms of structure, in terms of the trend, and I continue to look for this to ultimately see that weekly squeeze fire high, fire to the upside rather, taking you into 39.50 to 4,000. So Amazon, I think, looks great here, and then in terms of Netflix, green on the day, impressive Netflix. A good daily squeezing. So that continues to look pretty solid. So, nothing has changed here, and this is kind of what we talked about for the last few weeks. You build your position at the 21 EMA. That way you can catch the initial part of the move, and then on that first pullback, this is where with patience you're looking to potentially add a little bit more here. So if you're following that advice, you're in a totally different boat than somebody who's just chasing Apple up here. Now this gets pretty uncomfortable. So still continue to like the same positions we have. Still continue to want to add to them. And I'm going to tune out the noise in the news and just put structure above everything else. So in terms of the uptrend, I like it all the way down to the weekly 21. If we have to see some more selling pressure. All in all, though, here's the most important chart right now, in my opinion, is the Volatility Index, which just went kind of nutty here today. So a huge blowout move. Now, part of this crazy gap up, makes me want to think this just quickly dies back down, that it's done and over with. But there is a potential, regardless of the size of this gap up. Volatility could continue to spike here. So, as you're watching Amazon pull back, as you're watching Apple, and Netflix, and Tesla, etc., you got to be patient, I think, building your long positions there. Because as much as I like Amazon, as good as I think Google looks, as good as I think Tesla looks, realistically, they're all going to continue to trade lower if volatility continues to spike here. So what we're really looking for here is VIX quickly becomes quickly starts to fade back down towards its own 21 EMA, and then as VIX is dying down, then so long as Google and Amazon and Apple, etc. held structure, then you're chipping away and building a position or adding to a position. So in other words, I like all these names here on these dips that we're getting. Do I want to add exposure into the face of, VIX up 50% today? Not quite yet. So I'll wait for VIX to die down, and then I'm going to be looking to add cash here to Amazon, looking for a move into 39.50, 4,000. Potentially looking to add to some Apple, looking for a push into 170, 175. And I think we covered Tesla, but if not, Tesla holds up really well this week, trading here to 21 EMA. So when volatility dies back down, and if the uptrend for the market continues, I think Tesla structurally here is poised for a move to a brand new all-time high. So, moral of the story, in my opinion, as far as bigger picture structure goes, not a damn thing changed here today. And still, from a bigger picture perspective, nothing would change, even if we got a bit more selling pressure. So my focus is going to be the structure of the weekly charts and the volatility index. But I'm still holding my current positions, looking to add to them, and in Sunday's video we'll fire up the scan, jump into a bit more detail. But I think that structure over everything mentality makes it a lot easier to manage the emotions of being a trader. Because going back to last Friday, I think I'm sitting on $13,000, $14,000, $15,000 of open profit. Everything's a bit closer to a break even this week. So if you're getting focused on those numbers and getting all caught up in that, things can get a little bit wacky as far as the emotions go. But if you're just focusing on structure, so my open P&L on Amazon isn't what it was last Friday, but nothing has changed here about the structure of the beautiful weekly squeeze. To me, that's what matters most. So I hope you all had a good week. Hope you had a good Thanksgiving. But on my end, nothing really changes here as far as the focus and the game plan that I'm trying to work into December, January. So we'll dive a bit deeper on Sunday. We'll look at the scan results, see what else is setting up out here. But that's what I got for you for now, and I'll talk to you then.